And I appreciate you doing this because just recently my wife and I have gone through, I think I was telling you, she's getting health insurance because she's going back to work. So it was a tough decision on whose health insurance to take. So I'm sure lots of people out there are going to probably be going through the same thing once they move to locums and, which one do I go for? So this will be a good conversation. All right. So I am Patrick Flair with bagmask.com. And today we got a very special guest with us, Lyubov Abrams from Healthcare Contractors. And what she's going to talk to you about today is, if you're going to decide to go that locums route, how do you find healthcare? And I think before our healthcare coverage, and I think before we even dip into that subject, can you just sort of tell us, so if somebody comes to you and they want to get some healthcare coverage, they're not paying you for that service. This is a free service, correct?
That's correct. I get paid directly from the insurance companies. I get a commission off the premium. So there's no charge for my consultation.
Yeah. And so even if somebody just sits down and talks to you and you're offering them different plans and they don't really see something they like, I mean, it's no skin lost in their game, right?
Absolutely. They have, in fact, most of my clients, they walk away at least educated and understanding their options. A lot of times I can help them, but sometimes I can't, and I'll just let them know.
No, that's awesome. I mean, I think right there alone, people should come visit you and just chat with you a little bit. And I think the guests, if you do take the opportunity to reach out to her, you're going to find that she does have your best interest in heart. I mean, she wasn't even trying to sell me healthcare. I shouldn't even say that. We just had a conversation and she was amazing. I didn't need healthcare, but I wanted to buy it from her. Or at least I knew I had somebody in my back, somebody who could back me up if I did have questions. So let's just start from the beginning. Say I'm a W-2 employee. Locum Tenens is becoming very hot across the anesthesia right now for anesthesiologists, CRNAs, and AAs. And one of the big questions they always have is, what do I do about benefits? How do I find what I do with 401k, malpractice insurance? But the big one always is health insurance. So I give you a call and I say, Miss Abrams, I'm getting into this. What do you recommend? How do we begin this process?
Yeah. So the first thing I ask is just tell me a little bit about your situation. I'm kind of like the doctor in the role. Like I got to get all the, symptoms, what's going on. So we talk about what pre-existing conditions do they have, depending on, so that's kind of where we start. What's your health like? If I ask someone, are they healthy? Then you just say, oh yeah, I'm super healthy. And then we go through like, well, have you had a heart attack? Have you had cancer? Do you have diabetes? And then kind of, when's the last time you had surgery? So we ask questions like that just to figure out what their overall health is. And then also like, how often are you using the doctor? Are you going every other week? If your son has a little cough, are you going to the doctor? So trying to get a feel for the type of plan they need. Mm-hmm. So the first part of that conversation is really just fact finding for me to try to understand what it is they're looking for so I can meet their needs. So I'm a broker. I'm not a captive agent. There's a big difference there because sometimes you'll talk to agents that only can sell for one company. And so they do have your best interest in mind, we hope, but at the same time, they're limited to what they can sell. So they're really trying to, what I call product push, right? Mm-hmm. Whereas with me, I have no incentive to go with one product or another product. I'm really trying to figure out what is it you're looking for and how do we meet that need? And so for me, it doesn't feel like a sales cycle because it's really just a conversation. So I actually had a client call me the other day. She had found my information through Facebook and she said, I've talked to like 5 agents and I've told them the same thing. And you're telling me the opposite of what I've been told. And I said, really? So she was coming in, she hadn't had insurance and she basically wanted to have a surgery done. And it was for a pre-existing problem. And when I listened to her, I was like, well, you definitely need to have some type of major medical insurance that's going to cover that because, even if you haven't seen the doctor for it, when you go see the doctor, they're going to ask you, when's the last time you had this issue? And she's going to say, well, I've had it for the last 3 years. Well, all of a sudden that's a pre-existing. It's not something new that happened in that plan. So I listened to her and I was like, you need to have major medical. Otherwise you're going to run into a huge claims issue. They might, investigate your record. They're going to ask a lot of questions if they see that you put that in there. So even pointing things like that, and she really appreciated I took the time to do that because from a liability standpoint, I don't want to put someone on a plan and then come back and they don't cover it. So I'm like really big on, let's do a risk assessment. Like, where are you at? You know, what's your health like? Does it make sense to take the risk to go to a private plan? So when you go locum, you have a couple options. One, you can continue to use Cobra for up to 18 months. And sometimes that's a good option for someone that has some major pre-existings and they just need that continuous coverage. So we talk about that option first. Then we talk about if they would qualify for a subsidy through Marketplace. If they do, hands down, I say go Marketplace because you're getting money from the government to help you. Now, in a lot of situations, anesthesia contractors get paid very well, so they don't qualify. So if they don't have pre-existings, they're healthy, they're not qualifying for a subsidy, Cobra doesn't make sense. Then we talk about private plan options. So in the private plan option, we have a couple different type of plans. So we have what are called indemnity plans, and we have term plans. So indemnity plans, just so you guys understand how they work, if you hear anyone say, you know, I have a zero deductible plan, it's usually an indemnity plan. So what they do is, it sounds really nice on paper and when you say it, but they offer you a zero deductible and they pay up to a specified benefit amount for doctor's visits, for different things. So they lay out like exactly what they will cover. Now, just because it says zero deductible doesn't mean you're not paying anything. A lot of times there's caps on how much they'll pay for things. So for instance, a doctor's visit, they might pay up to $75. And after that, you're responsible. For different procedures, they might pay up to a certain amount of dollars. And then after that, so I've seen it where people come to me and they're like, oh, I have fantastic coverage. And I looked at their plan. I'm like, well, you have $250,000 in coverage in case something happened. And then, you know, you could upgrade your plan, but your premium is going to go up 3 times and then you might get dropped. And they're not aware of these exclusions. They're not aware of how their policy works, because a lot of times these insurance companies, they work on the premise that you have healthy people, they're not going to the doctor. So when you really figure out if you have a good plan is when something happens. So with the indemnity plans, I typically shy away from them as much as I can because there are a lot of exclusions. Anytime I hear zero deductible, I tell my clients to run away because it also means that there's no max out of pocket. So you just have to be careful with that. And if you are going to go down that route, understand the exclusions that come with it. I'm big on, you know, take a look at your policy and just have a general understanding of what it covers so that there are no surprises. You know, the last thing you want is for your son to be going into surgery and you didn't know that your surgery wasn't covered. So, you know, just doing practical due diligence, just like in anything, really helps. The plans on the private side that I sell the most of are called term plans. Now, depending on the state you live in, they can range from a 12-month plan to up to a 3-year plan. These plans are designed similar to major medical in that you have a deductible, you have coinsurance, and you have a max out of pocket. On a typical major medical plan, so they have like unlimited coverage if something happens. With the private term plans, they typically are capped, and this is the same for indemnity. They're typically capped between 1 to 5 million. Now, on the indemnity side, I've seen it as low as 250,000. I've been doing this a long time. You want to have more than 250,000, but typically claims don't go over 1 million unless you're really, really sick. And in that case, even so, with all the network negotiations, I've never seen a claim go, you know, over 1 million. So 1 to 5 million is usually what they're capped at. Now, the other thing is with a major medical plan, like if you're used to group coverage or even Marketplace, they are required to cover the minimal essential coverages. So things like preventative care, mental health, alcohol, drug abuse, all those things are required. Now, if you go in the private sector, it's not the same. So in that sense, because they're not following those rules, they can kind of pick and choose what they want to cover. And a lot of these companies have picked coverages that match healthy people like in their needs. So they cover accidents, they cover urgent care, they cover emergency room, you know, something catastrophic. Like I had a guy fall off his roof. I don't know how that happened, but he fell off his roof and it, was covered. But, but there are also exclusions. A lot of times these plans maybe won't cover like a speech therapy or physical therapy, or things outside, or maybe preventative care is not covered at 100%. So that's when you do that risk assessment and say, well, how often am I going to the doctor? Even if I have to pay a little bit more out of pocket, like twice a year when I go, and I'm saving $300-400 a month in premium, it still makes sense. So that's when we really talk about, usage and making sure that they're happy with the plan. I find with a lot of the contractors I work with, they have pretty low usage of doctors. They're relying on themselves or their team at work to self-diagnose. And so these plans work out really well. Plus, on a tax side, if you are getting like an LLC, a lot of times with the private plans, they can write that off as a business expense. Of course, consult with your accountant about that, but that also helps kind of draw that in. Now, there are pitfalls, again, with the terms, just like anything else, in that, once the term is up, you have to go through underwriting again. So if something did happen during that term that for some reason now you're not eligible, then at that point you would go to a major medical, whether it's a group plan or, a marketplace plan. So you have to consider that as well. But that's just, there's no perfect plan out there. Unfortunately, I wish there was. And there are in some states, I do have a great product that actually it's a private plan, but it meets minimal essential coverages. So we're starting to see more and more of that. And as you guys know, healthcare is like super political. So depending on who's in office, it really like shapes how things go with healthcare. So, what you might think of healthcare today is not going to be the same next year. So I do a lot of like education on what's going on, what type of plans we're seeing. Even now, where a lot of private plans are moving to what are called reference-based plans. And what that means is they're getting away with the traditional PPO networks, and they're going based on Medicare pricing, and they're paying based on that, and they're seeing that they're saving money doing that. So there's still some debate about, the problem that we see with these type of plans, or really any private plans, is the doctor's office, like the front office staff, they don't know them very well. So they're like, what is this? And so there's a little bit of education just from the doctor's office perspective. But I try to make it as simple as possible. And that's why, I think people work with me is they're not having to call an 800 number. If they have any issues like that, I call them, I get involved. I take it very personally. I have 3 kids. So I know what it's like, going to the ER, urgent care, whatever. So to me, it is personal, because health insurance can make or break you. And we have a lot of debt in this country due to medical stuff. So that's kind of my long-winded answer for you.
I mean, for a long-winded answer, there was a lot of information in there. And the word identity plan now just scares me. It sounds like a trap. So it's good that you're bringing this stuff up, because it's always so easy as a W-2 employee. Like, the company's like, here's your plans. Choose which level you want of this plan. So there's not as much thinking that needs to go into it, because you really just don't have options, like the options you're offering. So there was identity plan, and the other one was called a
short term. So we have indemnity, the short term plans, and then obviously we talked about marketplace and Cobra, and then some people also do cost sharing. So there's, again, a lot of debate on that. So what cost sharing is, it's really not insurance. It's usually faith-based organizations. So companies like Christian Ministries, MediShare, some of the big ones, OneShare. I do offer some of those, but I don't sell as many, just because there's no guarantee. In essence, you are living on a prayer, hoping that they'll pay. And so, it's all based. If you think about it this way, you have a whole bunch of people that are contributing to a pot, and when something happens, money comes out of that pot to pay for you, but there's no reinsurer like you would. There's no contract saying they have to pay. So, unfortunately, I have heard, situations where people have gone on these plans and they haven't had their claims paid, but then some people have had them. So it's kind of iffy. There's a lot of gray area. So if you are risk adverse, I would not advise going that route. Or if the other thing to consider is your age. As we get older, we have more of a need to get more preventative, like colonoscopies, and things just happen more when you get older, unfortunately. So you need to be careful about and really think about the type of plan you're getting on to be prepared for worst day, you know, not best day, but which on your worst day, how would you want to be treated?
Yeah, no, I think this is great information. And that's, like I said, it's a lot of information in a compact amount of time. So people, if you have any more questions that you want to reach out to Lyubov about, we'll make sure we have her contact information at the bottom of this video. Highly recommend reaching out to her. She is awesome, even if you just want somebody to chit chat with. I'm just putting that out there. I'm not going to say she's a therapist, but she was great on the phone.
I am a life coach.
Life coach. See, that's why. That's why she's so awesome on the phone. All right. Well, we really appreciate this. Hopefully we have you back on again. We can talk about more health insurance coverage.
Awesome. Thank you so much.
You're welcome. Thanks.
Bye.